and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, Israel says it will continue fighting in the war in Gaza, even after the death of the Hamas leader, Yahya Sinwar. Now, the U.S. President Joe Biden has said his killing presents an opportunity to end the war in Gaza. But the Israeli Prime Minister Benjamin Netanyahu says the mission is yet to be completed.
I'm standing before you today to inform you that Hamas leader Yahya Sinwar has been eliminated. The person who committed the most terrible massacre in the history of our nation since the Holocaust, the mass murderer who murdered thousands of Israelis and kidnapped hundreds of our citizens, was eliminated today by our heroic soldiers. And today, as we promised to do, we settled the account with him. Today, evil has suffered a heavy blow, but the task before us is not yet complete.
Well, we're now joined by Bloomberg's Jumana Bersace in Dubai. Jumana, good morning. So how does this change dynamics in the Middle East?
Well, it's another significant event in the region. Yahya Sinwar certainly had been on the target list for Israeli forces for many months now. There had been several attempts to eliminate him. But what became apparent in the last 24 hours is this case of killing him was actually on the back of what was apparently a chance encounter. The leader, Yahya Sinwar, was actually in the southern part of the Gaza Strip above ground when Israeli tanks noticed suspicious activities in a residential building. Israeli tanks then fired at that building, and it later emerged that the target was indeed Yahya Sinwar himself. And this was perhaps a little strange because it had been widely reported over the last 12 months that had been operating underground in some of those tunnel networks. But in terms of the significance, Yahya Sinwar, of course, was recently appointed as the political leader of Hamas after the assassination of Ismail Haniyeh. But he's a figure who has loomed large over Hamas over the better part of the last 2 decades. He's also known to be one of the masterminds of the October 7 attack. And right after October 7, the defense minister, Yoav Gallant, the Israeli defense minister, said that one of their war objectives was actually to eliminate Yahya Sinwar. And that has happened, which means that it is another feat for Netanyahu and the Israeli government. This comes on the back of the killing not only of Ismail Haniyeh, who I just mentioned, but other senior Hezbollah commanders and Hassan Nasrallah as well.
So, Jumana, who will lead Hamas now?
That is the big question. A couple of names have been put forward. Khalil Hayya is one of the names that people are saying, and he obviously resides in Doha, so that could potentially be an opening for these ceasefire discussions to continue. Some of the other names that are put forward are also names that some of the people residing in Beirut, for example. It is unclear at this point who is going to be the natural successor. But one potential opening, if you frame it within the context of these ceasefire discussions, is that Yahya Sinwar himself was known to be quite adamant and stubborn when it came to those negotiations. He was resolute and very hard-minded on the possibility of securing those hostage releases. But I think looking ahead, the question is whether or not his successor will not only be more open to those ceasefire discussions, but also whether or not Hamas as a force will manage to regroup and whether this new person will have the ability to influence the direction of Hamas going forward. So, again, big questions here.
Jumana, thank you so much. Jumana Bersace there in Dubai. Now let's also bring Bloomberg's MEA News Director Rosalind Matheson. Roz, does this escalate tensions in the Middle East, or is there more of an opportunity for peace?
Well, it's interesting because it could go either way. You can see the reaction from countries including the US, France, also Emmanuel Macron yesterday very quickly saying, obviously this is a big moment for Israel, but it's also perhaps opening the way to those ceasefire talks that Jumana was just talking about, the release of the remaining Israeli hostages and a chance to de-escalate the conflict inside Gaza. But also you can see, is this a moment that emboldens Israel? Does Benjamin Netanyahu say, OK, well, I can push on now and completely degrade Hamas? That's the goal, right, is to completely destroy them in Gaza so they can never attack Israel again. Push on with that. Meanwhile, still pushing very heavily against Hezbollah in Lebanon, and more broadly the tensions with Iran that are going on. We're still waiting for Israel to retaliate against Iran for the latest, ballistic missile attack that Iran did, and Israel has said that that's coming either way. So is this a moment that, pushes Netanyahu further, or does he sort of say, well, actually, this is a moment when we can also redirect potentially the conflict on the ground? You can see a case for him wanting to push on.
So do we know what China wants in this, and is it significant? Will we know, this again is a good opportunity, I guess, for, big important countries to come out to kind of map out what they would like?
It's interesting to look at countries like China because, historically they say your affairs are your affairs unless they affect us directly. And China's been quite hesitant. You can see that also with the conflict inside Ukraine, urging everybody just to sort of de-escalate. But China also has its interests in the Middle East, and those are not just strategic, but also very much economic, trade. They want trade and investment working for them in the Middle East, and this disruption that's going on, obviously including to shipping, is not good for China, and China needs its economy ticking over. We can see that with the policy announcements coming from Beijing lately. So certainly you can imagine China quietly nudging for this to happen, and you can see, countries in the region, Qatar again, but also the UAE pushing, for ceasefire talks to resume. China perhaps in the back end whispering in the ear on that front.
So, Roz, are you expecting quite a lot of mediation or attempts at mediation over the next 4 to 5 days?
We can see people will try and use this as a window to restart those conversations. And as Jemana was saying, it's important to see who replaces Sinwar, if that's someone who's based in Doha, who's more amenable to those direct conversations, or if it's someone who's still in Gaza, it's more complicated. But equally, there are other parties in these conversations, and Israel has also taken a pretty firm line on their conditions for a ceasefire. So it's not just about Hamas coming to the table, it's Israel also doing the same. You can see everyone's going to be pushing for that to happen in the near term.
Roz, thank you so much. Roz Matheson there, of course, the news director for EMEA. Coming up, traders raise bets that the ECB may go for a jumbo rate cut in December, following the first back-to-back cuts in over a decade. So we'll bring you the details next, and this is Bloomberg. The conversations that matter, the insights you need. This is The Pulse, and I'm Francine Lacqua here in London. Now, markets pricing in a 20% chance of a half-point reduction by the ECB in December. That follows the first back-to-back cuts in over a decade. Now, the ECB President, Christine Lagarde, says inflation is moving in the right direction.
We believe that the disinflationary process is well on track. And all the information that we received in the last 5 weeks since our last monetary policy decision were heading in the same direction, lower. That is what has caused us to make the decision to cut our 3 rates by 25 basis points.
And I'll be speaking exclusively to Christine Lagarde at the IMF annual meeting next week. You'll be able to see that interview at 3 p.m. London time on Tuesday, right here on Bloomberg. Now, to talk more about the markets, so we're joined by Marwena Koniam, Bloomberg's Markets Today team, and Nataliia Lipikhina, head of EMEA equity strategy at JP Morgan Private Bank. So thank you both. It's been a big week. I mean, in the markets, there's been so much going on. Nataliia, let's kick off with you. We heard from Christine Lagarde. I don't know what, there's a lot of data dependency given some of the uncertainties surrounding the European economy. What does it mean for markets in general?
Yeah, good morning. Happy Friday. Thanks for having me back. When we look into the markets, we're definitely seeing that data has been slightly decelerating in Europe. And we heard that from the ECB yesterday. It was a relatively dovish 25 bips cut. So what we're assessing right now is understanding where the data goes from here. And if you look into the earnings season in Europe, it has been a bit disappointing.
They've been all over the place, I feel, earnings. It's really almost company dependent more than sector dependent.
I think it's a bit too early because we're still very early in the earnings season. But overall, we're definitely seeing a big disparity between the US earnings, where the market expects 3-4% earnings growth. We think it could grow actually 7 to 8. And then in Europe, where earnings are actually declining by 8%. And so far, what we saw, the market has been slightly disappointed.
Marwana, when you look at and put this into context of global risk, it's Middle East. I feel like the Fed is still the main driver in changing equities overall. But what do you see deciding the markets next week?
Yeah, I mean, it is a very interesting time. Obviously, we've had stronger data coming through from the US, retail sales in particular. That's actually weighing on the dollar a bit at the moment. But of course, people are repositioning ahead of next month's Fed meeting. And of course, with the elections looming increasingly close now. So we're seeing quite a lot of sort of interesting domestic US pulls there. But then, of course, as you said, the global picture is increasingly fraught and uncertain. And so you're seeing haven assets, things like gold. Gold's at a new record today. So it's not necessarily one thing in the US that's going to be driving the trajectory in markets. And I think, the world is really weighing on quite a lot of assets at the moment, as well as looking ahead to those key indicators in the US.
Elections. What elections? 18 days. Who's counting? Nataliia, I mean, does it change everything in terms of policy and therefore, your outlook on U.S. companies and also how they relate to Europe?
Overall, we think that what matters to the market is the state of the economy. And if we look into the U.S. market, we actually heard from the US banks that consumers, one of the most important pieces of the market right now, is actually relatively stable. And we're looking into the labor market, it is very resilient. So for us, this is the most important as to what drives the earnings, in the future in general. When it comes to Europe, I think European outlook can be quite volatile, and the market is definitely in the wait-to-see mode what's going to happen over the next month.
In terms of sectors, luxury is having a tough time. I know, for example, the chips, it really depends on who you're selling to.
Yeah, absolutely. With the sector that we're very positive right now is actually industrials. When you look into the industrials, we think that the data centers stimulus is still very strong. And we heard for a few companies that infrastructure data centers is where the demand is going. And we think that in general, the AI trend will just not benefit the technology companies, but also the value chain in industrials and utilities companies. Luxuries are having a bit of a tough time, but overall, in the long term, this is the area of the market that we feel very comfortable in.
Marwana, again, I mean, there's this gravitational pull from the Fed, and you mentioned retail sales, and frankly, expectations for Fed cuts have been all over the place. They've been, seesawing. But how much is that important compared to what we're seeing in China, for example?
Well, exactly. I mean, the Chinese demand is really driving an enormous amount of the market at the moment, or concerns about it. So every time we see commitment to stimulus, the government stepping in to support the stock market, for example, like we have done, you see that really reflected in asset prices like the commodities. And that flows through, of course, into companies like miners. Even in the UK, miners are always leading the FTSE today again. And that is really something that is in flux quite a lot. And from a US perspective, you also have the tech industry and the competition, but also demand. So, things like chips, things like Apple iPhones, all of these factors play into both sort of upcoming earnings seasons, as well as actually what the economy starts to look like and the concerns there. And again, the election is incredibly important for those diplomatic relations and trade policies.
Yeah, trade, which leads to inflation. Why are you so selective on European equities, Nataliia, given that, some of these companies are also very broad and very international?
We're looking into the growth momentum, and the growth momentum in Europe has been slowing down. We have seen the earnings downgrades since August. This is when we became a bit less positive on the market in general, and therefore we want to be quite selective in terms of what we own. Europe in general is quite a complicated region. You need so many things for Europe to work, and therefore we prefer to go into those multinational companies that we know that they sell to the rest of the world, not just Europe. They also depend on the US market that currently is actually quite strong. Even again, if we're looking into industrials or even luxury companies, yes, China market is quite weak, but European and the US markets are relatively strong.
Okay, we'll maybe look at country by country how you break that down. Thank you both for joining us. Marwana, Konyama, and Nataliia stays with us. Coming up, a mixed economic picture out of China as policymakers ramp up stimulus to help the world's second largest economy. So we discuss a little bit more at length about the prospects for China and, of course, what it means for Europe and the continuation of earnings season. That's next, and this is Bloomberg.
Since this year, we are faced with complex and changing external circumstances, increasing challenges and difficulties in the outside environment. The domestic economy is also upgrading and making structural transformation. So the temporary pains of this adjustment are being released.
Well, the deputy director of China's National Statistics Bureau speaking there after the country's central bank disclosed more details of its measures to boost capital markets. Now, the announcement came minutes after authorities released figures showing China's slowdown deepened in the third quarter. Well, still with us, Nataliia Lipikhina from JP Morgan Private Bank. Nataliia, thanks so much for sticking around. I mean, China is such a big force that it's impossible to ignore it. When you cover European equities, how exposed or how concerned should we be about this China slowdown?
Yeah, absolutely. Lots of European companies are so much exposed to China region, so we can't ignore what is happening in the region. Basically, the way we look into it is you have monetary and fiscal policies right now, and the market really needs to understand what is happening on the fiscal side. This is where the market is laser focused to understand what is happening next, and most importantly, how and if they will impact earnings, especially for the European companies.
But so what are we doing with China? Are they deporting deflation? Is there a concern if you keep on stimulating, I guess, the old sectors? The Chinese economy is never going to change to a point where it's a catalyst for the rest of the world.
Yeah, unfortunately, this is something that we're seeing in the sectors like EVs and autos, where you have a lot of competition in the market. You have the impact on the operational profits that companies in Germany, for example, have. This is an unfortunate situation that Europe is now going through. And therefore, back to your previous question, why we become so selective on what we actually own within Europe.
Do you own any of the renewables? Or I know you're looking at the industrial complex, but where, for example, do you put EVs and car makers?
Actually, in the industrials. We think they are probably the best positioned because they benefit not just from the electrification trend, but also from AI stimulus. If we're thinking about the big US tech companies, how they're spending their capex, this what relates to the big industrial companies coming out of Europe.
Nataliia, the UK, so, I mean, all eyes on October 30th when we have that budget. Is this a good investment opportunity because things look cheap?
We are quite neutral on the UK market. Reason being, it is cheap, has been cheap for a very long time, but in our view, it just lacks a catalyst. And in general, the earnings growth is not as high as in other regions. Again, comparing to the US market, where we think earnings can grow 7-8%. That is a big number, especially thinking that it's the fifth quarter of earnings growth. I think we're just lacking that in the UK. And also, UK market is very exposed to China. So we definitely need to see the stimulus coming out of that region to become more positive on the UK market.
I mean, what do you need as a catalyst internally? I mean, can the budget on October 30th provide that, or does it need to be something bigger? Do you need to see growth?
You need to see growth, absolutely. You need to see growth internally and externally as well, because the UK market is also quite an international market. You need to see the pickup in areas like China.
Nataliia, as always, thank you so much for joining us today. That was Nataliia Lipikhina, head of EMEA equity strategy at JP Morgan Private Bank. Now, coming up, more on the geopolitics of the Middle East as Israel kills the Hamas leader Yahya Sinwar, the architect of the October 7th attack. We'll have a full roundup. We'll also talk oil. There's an important piece by Javier Blas talking about strategy in the Middle East and talking about how oil will change in the coming weeks and months. This is Bloomberg. Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. Now, Israel kills Hamas leader Yahya Sinwar, the architect of the October 7th attack, spurring U.S. calls to end the war in Gaza. But Israel's prime minister vows to keep fighting until all hostages are free. In markets, Chinese equities rally after better-than-expected GDP data and retail sales in the country, as the PBOC steps up support to help prop up the world's second-largest economy. Plus, the ECB lowers rates as expected, with investors seeing another cut in December. Meanwhile, the latest U.S. economic data cool bets of Fed easing. Now, the escalating Middle Eastern conflict has also led to a shift in relations between Arab nations in the Persian Gulf. And that's the topic of our weekly must-read by Javier Blas, Bloomberg Opinion energy and commodities columnist. Now, in this piece, he says, I don't think the oil market has fully appreciated the change in tone of Saudi-Iranian relations, including the reestablishment of diplomatic relations last year after Chinese mediation and ongoing regional diplomacy. Now, for Beijing, the relationship between the two most influential Middle East nations matter. It buys more Saudi and Iranian crude than anyone else. And Javier joins us now to discuss. Javier, first of all, it's an incredibly smart piece. It's well written. And it's actually something that we don't hear about a lot, is that, because of also the demand for oil and what Russia is doing in Ukraine, this changes the dynamics on what China wants in the Middle East.
Yeah, China has been remarkably quiet for several weeks on the conflict of the Middle East. But this week, they really pick up a bit of their engagement. They have a conference call between the Foreign Affairs Minister of China and counterparts in Iran and Israel. So obviously they are interested. They put together Saudi Arabia and Iran a year ago. Both sides reestablished diplomatic relationships. For Beijing, as you said, this matters a lot. They buy more crude oil from both countries than anyone else. And the tone of the relationship between the Saudis and the Iranians is so different from 5 years ago. They have ambassadors in both sides. And to me, there was a picture that it was just a photograph that was really emblematic of what we are talking about. The Iranian Foreign Affairs Minister traveled to Riyadh for meetings. You will be expected. He will be received by his counterpart in Saudi Arabia. And he was. The surprise was that he was also received by Crown Prince Mohammed bin Salman, who runs the day-to-day affairs of Saudi Arabia. And not only he was received, Saudi media released a number of photographs where were smiling, at ease. I mean, it didn't really telegraph we are enemies. It doesn't mean that they are friends. But I think that they have found a way to work with each other.
But so what unites them? I mean, is it oil? Again, you talk about the neutrality, so I don't know whether you'd call it as like frenemies. But are they is it the U.S. and actually, that unites them because neither particularly likes the U.S.?
Francine, I love the expression frenemies because I think that they really express. I mean, I don't think that anyone in Saudi Arabia is just cheering from Iran in this conflict, but they are not rooting for Israel as it was in the past. I mean, the Middle East, as in many places, has been ruled by this old say of the enemy of my enemy is my friend. Therefore, Saudi Arabia was siding with Israel against Iran. I think that it unites then a desire for stability, a desire to be able to export their oil. Both sides are very interested in getting the money. Iran obviously needs it, and Saudi Arabia is in a moment where it's investing a lot and needs the money. I think that for the Saudis, there was a moment in 2019 where militias affiliated with Iran attacked the biggest processing facility, Abqaiq attack in 2009. I think that the Saudis were shocked that was possible, that they didn't even detect the drones. And they were also shocked that the United States did absolutely nothing. And that was not Biden, that was Donald Trump who was president. Donald Trump didn't want to retaliate against Iran. And that, I suppose, that changed the thinking in Saudi Arabia. Why we need to be siding with America and Israel against Iran all the time if we are going to be collateral damage? Let's put ourselves first, and perhaps a frenemy relationship is what suits us better.
But Javier, I mean, the Middle East relations have always been complicated. Are they, more complicated than ever between also Bahrain, Qatar, Saudi? Because the U.S. can't put pressure on Israel.
They have been very complicated in recent years. But again, if you look at where we were only a few years ago, 2019, 2020, 2021, where several countries allied with Saudi Arabia, and Saudi Arabia itself broke away diplomatic relations with Qatar. And, we came remarkably close from Saudi Arabia actually to invade Qatar. And now both countries are again in good terms. They are working together. So the GCC countries, the Gulf Cooperation countries, are getting along better than before. Look, it is a difficult family down there. There are conflicts. I think that I will not call true friendships anywhere, but frenemies or getting along, I think that defines that, and that really changed the nature of the conflict.
Would China benefit from a wider-ranging war in the Middle East?
No, China will be one of the losers of any war on the Middle East. It really imports more oil than anyone else in the planet. It imports a lot of crude from Saudi Arabia and Iran. And in the case of Iran, Chinese refiners are purchasing around 90% of all the Iranian oil exports, and they are doing it under discounts because Iran is under sanctions, and therefore they struggle to sell their oil. The Chinese know that they can get oil at, say, $10, $15 discount, sometimes less, maybe $5 discount. That's great for China.
Javier, we're just getting some live pictures of President Joe Biden arriving in Berlin, meeting with the German President Frank-Walter Steinmeier at the Bellevue Palace in Berlin. Now, Joe Biden will then be awarded the highest civilian honor by the German president. Cooperation on Ukraine, the Middle East crisis, were also high on the agenda. I mean, I was struck just 10, 15 days ago when Joe Biden spoke about possible hitting Iranian infrastructure, oil infrastructures. I mean, what's that about?
Well, I mean, we know that the discussion was real. The president, I don't know if that was an intended signal to the market or he just make a mistake and disclose something that perhaps he should not have said. So we know that the Israelis were having a real discussion about hitting Iranian oil targets. What we don't know is why. Were really intended to do it, or were signaling to the U.S. we are prepared to do this to let the U.S. convince Bibi Netanyahu, please don't do that. That will be too much. And in exchange, he got concessions somewhere else, including perhaps anti-ballistic missile batteries from the U.S., which have been delivered. So we don't know exactly, but it's true that for the first time we have here the U.S. admit the Israelis are seriously thinking about hitting Iranian oil. That is a significant escalation.
I mean, it is an escalation. I'm still surprised that actually the price of oil moves a little bit, but it has moved that much. I know there's shale, I know there's the U.S., but actually the energy complex seems to have shifted so much that they don't really take into account real geopolitical risk.
Well, the sentiment has changed. We have a lot of spare capacity, true, mostly in Saudi Arabia, which can be affected. But to me, there are two things that have changed. So we have had a number of disruptions in the past that really were resolved earlier than expected. The market has learned from that. The market is more resilient. And also the development of the options market allows everyone to buy insurance cheaper rather than having to take a directional bet on prices. Don't get me wrong, buying options also influence the price of oil, but it's not the same. And I think that the market is taking a stride. And then the context matter. In previous crises, we were with very strong demand. The Chinese economy was booming. We are going into 2025 with weaker economic growth, weaker oil demand growth, and a Chinese economy which is still growing at 5%. I mean, many European countries will sign today 5% for the next half a century. I mean, we are seeing President Biden arriving in Germany. Germany will sign.
Would do anything for that.
Yeah, absolutely. But it's not 10% that we were used 10, 15 years ago in China.
Javier, thanks so much. As always, Bloomberg Opinion energy and commodities columnist Javier Blas. Now, world leaders have called for Israel to end the war in Gaza following confirmation that the Hamas leader, Yahya Sinwar, has been killed. It comes as President Biden, live pictures there, visits Germany with the Middle East high on the agenda. So let's bring in Bloomberg's EMEA News Director, Roz Matheson. Roz, what will you be watching out for in the next couple of days?
Well, obviously, we're watching a number of things within the region itself and beyond. One of the first things is, what does this do for the war inside Gaza? What does it do with the push towards getting those ceasefire talks resumed, those talks around the return of the Israeli hostages? What does it mean also for the fighting that's going on between Israel and Hezbollah, another Iranian proxy group in Lebanon? And that's that widening Middle East conflict that we're seeing in general. On top of that, are we still going to get the Israeli retaliation against Iran for the recent missile strike that Iran did against Israel? So a lot of moving parts there, that it's very unclear where that all heads. You know, does Israel push on with all of those regardless of the death of Sinwar? And beyond that, with the arrival of the US president in Germany today, we're seeing France and the US particularly push heavily for the resumption of ceasefire talks in Gaza and saying this is a moment to reset. You know, you've weakened Hamas. Sinwar's an example of that. Can we now find a moment to sit down and talk again about that ceasefire and a path forward towards ending the war in Gaza? But equally, is that going to be something that Israel and Hamas are going to entertain? It takes both of them to agree for that to happen, and it's unclear whether either would agree to that. So what you're going to see is Joe Biden in Germany today pushing hard on the Middle East, also pushing hard for continued support on Ukraine, another key reason why he's in the region.
But, Roz, what would it take for the Prime Minister of Israel actually to agree to a ceasefire? This seems like a good opportunity.
Well, it does. And obviously Israel is saying this is a win for them. And it's something that Netanyahu had said was his goal. One of his goals was to actually kill Sinwar as the architect of the October 7 attack on Israel. But more broadly, he has said his goal is to degrade Hamas so it can never again attack Israel. Hamas is still there in Gaza. Israel is still fighting them in Gaza. This is a nebulous sort of group that exists without its leadership, potentially. And have you really weakened it enough to make that point? So is that goal achieved? We saw from Netanyahu yesterday, he says the war will continue. So perhaps they will agree to have those two-track things going. You do have ceasefire talks that resume maybe in Doha, but there's no immediate signal that Israel's going to slow down here.
Roz, thanks so much. Bloomberg's EMEA News Director Roz Matheson. Coming up, black workers in the City of London say inclusion is no longer a priority. We'll look at why diversity efforts appear to be stalling. That's next, and this is Bloomberg. The conversations that matter, the insights you need. This is The Pulse, and I'm Francine Lacqua here in London. Now, black workers and diversity practitioners in the City of London have told Bloomberg that corporate priorities are shifting away from diversity. The UK's financial services sector had pledged to boost representation in the wake of George Floyd's death. But 4 years later, progress remains uncertain. Well, Bloomberg's Tiwa Adebayo joins us with the very latest. Tiwa, thank you for joining us. I mean, we've seen basically this pushback against DEI in the US. Is it a similar situation here in the City of London?
Well, yeah, as you mentioned, in the US, it's really legal and regulatory pressures that companies are facing. But what's happening here in the UK is that pressure is coming from firms themselves. So they're pulling back on diversity-focused initiatives and recruitment schemes, and it's having an impact on black workers in the city. That's what they're telling me. But I've spoken to a number of diversity, equity and inclusion professionals, and what they're saying is that there was this impetus for change in 2020, and perhaps some firms felt rushed to make those changes, and now we're paying the price for that, and we're seeing that the schemes are not perhaps giving the results that many of those firms desired. And as a result, they're reassessing those commitments, the investments that they made as well. And we're seeing a pullback.
Why the shift?
Well, the shift is really being driven by perhaps the fact that these strategies aren't fit for purpose. That's what I heard from the likes of Mark Lomas, for example, who is the head of culture at Lloyd's of London. He said to me that to get lasting change, you really need to make a concerted and targeted effort. And because that's not happening, what we can see is that black people are leaving the city, for example, at a higher rate than their white counterparts. They're not reaching those top levels. For example, in UK law firms, black people are 4 times more likely to leave than their peers. So there's a high attrition rate, and it's being driven by this drawback that we're seeing from firms.
So, Tiwa, what does it mean for black workers?
Well, it means a number of things. I spoke to some workers who report feeling abandoned after initially joining through these diversity-focused schemes, and they feel there isn't that set-out path for progression that they need really to feel supported. They're speaking of a number of different changes, so subtle things like perhaps fewer Black History Month events, fewer networking events, but also hostile working environments and managers that aren't trained adequately to deal with diverse talent.
Tiwa, thank you so much. Tiwa Adebayo there with the very latest on some of the scaling back of these diversity initiatives. We also actually did a podcast together this week called In the City. It was out yesterday. I would suggest everyone go and listen to it because it's 20 minutes and we really take our time in explaining also some of the way forward. Coming up, you're looking at live pictures of the U.S. President Biden, of course, arriving in Berlin there with the President of Germany. We'll have plenty more on what this means for transatlantic relations ahead of that November 5th vote. This is Bloomberg. Now, U.S. President Joe Biden is in Berlin ahead of being awarded the highest civilian honor by the German president. Now, cooperation on Ukraine and the Middle East crisis are also high on the agenda. Let's get more with Bloomberg's Oliver Crook, who's in Brussels. So, Ali, good morning. Biden's arrival comes just after Israel announced the killing of Yahya Sinwar, the leader of Hamas and the mastermind of the October 7th attacks. So that's going to be high, if not top of the agenda.
Yeah, absolutely. And I think that the sort of hope for many of these leaders in Europe and Biden, and as we heard from candidate Harris as well, is that this sort of opens the possibility of potentially an off-ramp for slightly beginning to de-escalate the situation within Gaza and the south of Lebanon. Remember, earlier in the week, here in Brussels, we had the meeting between the GCC leaders. You had Mohammed bin Salman, the Crown Prince of Saudi Arabia, meeting with EU leaders. And they really came out with a sort of joint statement to ask for a sort of ceasefire in Gaza and in southern Lebanon. That seemed like a very remote prospect earlier in the week. This is beginning to feel like it may be a little bit closer after Israel has achieved at least one of the two aims it needed to achieve in order for it to be able to say that its operation was successful. The second, of course, is going to be the return of the hostages, which they have not yet been able to bring home. Where things get interesting for the Quad meeting, where you have Scholz, Macron meeting Biden as well as Starmer, is you have sort of opposition in terms of where Macron and Starmer sort of sit on the issue. You have Scholz and Biden, who have been much more permissive of Benjamin Netanyahu and how he has sort of gone about it. So it'd be very interesting to see if they can come to a sort of joint statement on that and sort of forge a path forward in a sort of post-Sinwar world.
Ali, on the EU leaders meeting in Brussels, I mean, there's not much actually to go by, but what did the debate center around?
Yeah, so listen, I think that one of the main issues that we had here was for President Zelensky was it was very hard for his message to cut through and his victory plan with the EU leaders here, particularly ahead of the U.S. election, because the leaders here realize that no matter, depending on the outcome of what happens in the United States, they're going to have to rewrite their Ukraine policy to deal with that sort of reality. We should say that Biden arrives in Berlin with a sort of new package of 450 million euros of additional support for Ukraine, but that was really sort of one of the issues that maybe didn't get the prominence that Zelensky wanted. The issue that did get prominence, Francine, and this is going to be something we're going to be talking a lot about in the months to come, is the question of migration within Europe. You've had a lot of debate over it. You have seen a much harder line from the Europeans on how to deal with migration. We have Giorgia Meloni really wanting to make herself the sort of poster child in terms of how to deal with immigration in Europe, sending migrants, as she did for the very first time this week, to Albania, a third sort of party country, to deal with the question of migration. And there's also the question of, Poland sort of basically saying that they're going to halt their asylum system right now because they say on the Belarusian border the Russians are sort of weaponizing immigrants to try to create division within the EU. And really what we got from this meeting is a much harder line, even from the sort of liberal Democrats and the sort of more socialists. So we're going to see that continue over the next few months, Francine.
Ali, thanks so much. Oliver Crook there in Brussels. Now, let's also turn to one of the big corporate stories in the U.S. this earnings season. Netflix shares higher pre-market. That's after the streaming giant actually beat Wall Street's expectations in every major metric, despite challenges from last year's strikes in Hollywood. Well, Bloomberg's Charlie Wells now joins us. I mean, I just can't stop thinking about The Perfect Couple. I mean, they're doing quite a lot more, but honestly, what's it down to?
Yeah, I mean, content, as you say, is part of it, right? Like they're producing shows and programming that people want to watch. They're pivoting into live programming, which is something that could help on their ad front. But really what Netflix has been able to do over the past few quarters, and this one in particular, is to show that they can still get revenue from that password clampdown, but also that pivot to an ad-supported tier for that consumer who wants to spend a little bit less.
I mean, live, it's mainly sports events, I imagine.
Live, it's mainly sports events. We've got some NFL games that are coming up on Christmas Day, and the goal there is to create revenue and to create revenue, of course, but also inventory for advertisers. But this is proving a little bit more difficult, and analysts want to see this to bring in some material financial gain for Netflix. It's going to take a little while for that to build out.
If they want to stream the Pulse, let's talk. 1 week into the third quarter earnings season in the U.S. How's it going?
A lot riding on this season, a lot more attention focused on earnings than a lot of other quarters. And so far, 67 companies in the S&P 500 have reported. 76% have had a positive upside surprise on earnings. So it's going pretty well, but the bar had been lowered significantly by executives and also analysts.
I mean, I guess what people really want to know is the U.S. consumer is holding up, and they are.
This is that. I mean, we've been getting that read, we're kind of in the financial part of earnings season, and a lot of bank executives have been talking about that consumer holding up.
And then Black Friday is going to be a big one, right?
Of course,
All over Black Friday.
Yes, exactly. Can they spend? Are they going to keep spending? Let's see how they go.
Thank you so much, Charlie Wells there with the very latest, of course, on Netflix, but the earnings season also in general. Now, this is the playbook. Joe Biden in Germany. We just saw live pictures where he's due to meet, where he's also meeting Olaf Scholz a little bit later on. Keir Starmer and Emmanuel Macron. Then at 1:30 p.m. UK time, there are U.S. housing starts. Again, there's been a little bit of a shift when it comes to Fed cuts. That's on the back of some pretty strong data out of the U.S. And then we hear from a number of Fed speakers. Neil Kashkari, Christopher Waller, and Raphael Bostic are all speaking. Now, looking ahead to next week, a few programming notes. I'll be sitting down with the ECB President, Christine Lagarde. That's Tuesday, 3 p.m. UK time. Also on Tuesday, a conversation with the ASML Chief Executive Officer as part of the Bloomberg Tech Conference that you can catch at 9 a.m. UK time. China's central bank moving to support markets just as data showed the economy expanding the least in 6 quarters, signaling that the government's intent to continue a stimulus push to draw a line under the slowdown. Up next, Bloomberg Brief with Danny Berger. This is Bloomberg.